Lesson 4B, trading, supply and demand. Supply and demand is the key factor in market price and trading. As you'll see, supply is the amount of stock or units of the desired asset available. Demand is the amount of desire for the desired asset. So as the supply decreases, demand increases. So this is an inverse correlation here. If the supply decreases, the demand is going to increase. If the supply increases, most likely the demand is going to decrease. On the other hand, as the demand increases, the price increases. Now this is more of a linear correlation. Right? As demand increases, price increases. As demand decreases, price is going to decrease. So the main key you want to look for here is the demand of the desired asset. But the demand is correlated to the supply. So supply, demand, and the price are all linked together. Right? So your main key is that if you have low demand, you're going to have a low price. If no one wants what you're buying or selling, then they're not going to buy, and the price is going to be lower and lower and lower. But if a lot of people want what you're selling, the price is going to keep going higher and higher and higher, because you can now sell this for more, and people are going to be buying it because they want it so bad. The demand is so high. So for example, let's take a look at supply. Let's say you sold apples and you had 10 apples for sale one day and they sold out, but then the next day you came back with 1,000 apples, and those apples aren't necessarily going to sell out. So if you want to sell those apples, you're going to have to lower the price, and then people will be more inclined to buy because you have so many. I don't really need that many. But if you lower the price, I might be more inclined to buy what you're selling. So as you can see, your supply increased, but your price had to decrease. So that's what we look at when we look at tokens with a lot of supply. There's not too much demand there because I can always get some of this coin. There's so many of it. There's so many coins. But if you look at something like a Bitcoin, a truly deflationary asset, there's not that many Bitcoin. There's only 21 million, a little less than 21 million ever going to be in existence. So that means the price will continue to go up and up and up because there's going to be no more supply. So the only thing that will go up is the price. If you can't add any more supply, then you have to increase the price. That's how it works. So as you can see on the bottom, we've got the arrows. A high supply will lower the demand. A low supply will increase the demand. As the demand increases, the price increases. And as your demand decreases, your price decreases. So I would say the key thing here is the demand, but also the supply works in tandem with the demand, and of course the demand drives the price. So supply, demand, and price are really the key factors that we're going to look at in terms of what a market is going to do. Is it going to go up? Is it going to go down? And on this next video, we're going to be looking at a technical analysis tutorial. So stay tuned for that. I'll see you in the next video.